Let's just talk about how to think like a professional trader. Okay. So, the number one issue that people have right now and today is how you're going to deal with losses. Okay. Those losses are not as significant as you think they are. Okay. You feel that that's the end of the world. You feel that you're never going to come back from it. You feel like you're never going to make that money again. Okay. The most important thing about that loss is how you react to it. It's so much more important than the loss itself. Everybody gets caught in, oh, I lost 5 grand yesterday. I lost 500 grand yesterday, whatever it is. Okay. People get attached to that. They get used to that feeling. That feeling breeds more of those feelings. You need to be really careful of that type of stuff in your thoughts. And this is going to be a little earthy, just FYI. You need to be really aware of that. So when you have a big loss, how you act to it's more important, okay, than anything. If you take nothing away else from that today, take that away from this, okay? Your thoughts and the way you act towards that loss are more important than the money that you lost, okay? These are the most common trading mistakes that people make. And when I started out, I made these two, okay? So when I started out, I made these two, all right? And I have to be diligent to make sure that I don't make them again. Okay, it becomes a little more automatic as time goes on, but you must be diligent that you don't make these mistakes. So let's say you took a big loss yesterday. You bought Apple at the high and you never sold it, right? So now you're going to leave that trade on and you're going to trade through the pain and you're going to trade around it and try to make that money back while you hold on to it, even though you know you should be out of it, okay? You're trading through pain. All you're going to do is create more internal turmoil, right? It's going to completely screw your head up all day long because you're going to be constantly focused on this and trying to make enough back for this trade instead of focusing on where your money's supposed to be going, which is consistent, successful, profitable trading. Okay. Some people will just give up. Okay. It happens. They'll just quit. If you decide this isn't for you, then it's not for you. Trading is not for everybody, period. It's not. So, and that's okay. There's nothing wrong with that. But to quit because you suffered a loss, that's not okay. It's not okay to quit something that you love just solely because you took a loss. So what? I mean, the losses I've taken in my career are staggering. And I'd put them up against anybody's losses that are, in the trading room. So I think that that's really important for people to get their head around. Now, you can quit, you can give up, you can feel hopeless, or you can do something about it. My advice is to not withdraw from it. Doesn't mean you have to go back and trade right away, but we're going to get into what you can do so that you can focus on those feelings and how to make them work for you instead. We're going to address it. So you're going to have actionable ideas at the end of this, okay? Things that you can actually implement to deal with this. So I'm very big on action. Trade in revenge. I need to get my money back. So there are several times that I will get emails from people, and those emails will be very clear. It will say, well, I'm in these 17 names and, you're down in all of them. That's the email that I'll get. And I'll respond back with a simple line of, hey, where are your stops at? And then usually I get radio silence. That's not a trading strategy. And trading to keep doing that while you're owning things that are not working to quote, I'll sell when I break even. Okay. I cannot tell you the amount of people that have held NIO at 50 or PayPal in the 200s or UPST at 300s that reach out to me. Okay. I constantly get people that reach out and ask me what they should do. The same thing they should have done 12 months ago, right? Sell, take the loss, but they don't want to do it now because now, quote, the loss is too great. Okay. You need to take responsibility. Okay. We're going to focus more on this one. You have to take responsibility. It happened. Why it happened. We're going to get into how to assess how it happened and when you can deal with that. Okay. Now, abandoning what has worked for the new thing. This is a very common mistake that people do after suffering a loss. Instead of taking responsibility for the loss, what they'll do is go, oh, I should be using this alert, or this newsletter had a great idea. I should be following them. Let's talk about that for a moment, okay? Trading is a zero-sum game. That's how I view it. Unless something comes public and then it adds to the bigger pie, it's a zero-sum game. Somebody wins, somebody loses. Somebody bought puts yesterday on the SPY and they made a killing. Someone sold those puts to those people yesterday and got annihilated, okay? So you don't change your strategy. You don't go look for the new thing because the thing you just didn't work. You figured out what didn't work, and then you maybe add a new thing. But you figure out what didn't work for you first, and then you talk about that. So these are the most common mistakes after suffering a loss. Now, the correct way to act during trading losses, okay? Successful traders treat these as an opportunity. This is an opportunity for you to learn and improve your trading. You had a bad day yesterday? Great. Okay. How can you improve from it? What can you learn from that? Okay. I know it doesn't feel like that when it's happening, but the thing about the loss is it tells you what not to do, right? It's, we call it tuition. It's telling you what not to ever do again. It's basically slapping you in the face with a wet noodle and saying, don't do this again. And so you go, okay, let's not do that again. That was awful. And then figuring out how to reduce and mitigate the chances of that happening. The larger the loss, the more opportunity to learn from it becomes skillful. Okay. If you made a lot of money this year and then you lost it, you need to understand a couple things. You had the ability to make that money and keep it, and you didn't. Okay. I'm not saying that to throw it in. I'm saying that in so you wrap your head around that. Because if you did it once, you can do it again. And when you understand that you can do it again, your trading changes. You don't trade from fear. Okay. You will not trade from fear now, right? You will trade from, oh, I took a loss. Okay. And we'll talk about this more at the end. I took losses yesterday on 3 trading ideas that I posted. Short, small loss, calculated losses. And then when that was over, I knew to stay out of the way. It wasn't my day. So, but how did I learn to do that? By getting my head kicked in. Okay. The larger the loss, the more opportunity to learn from it, become a more skillful trader. Coming back from a loss is extremely challenging. It is. And I can't stress that you have to address it. This happened. Now what do I do? Now, once you understand those losses, okay, and nothing is accomplished by ignoring the loss. So when you have something bad that happens, okay, a loss, not following your trading portfolio, whatever it is, not following your morning routine, okay, just you can't ignore it. Just deal with it and then move forward. And I know that's easier said than done, but by processing it, it allows you to move forward. Burying it and saying, oh, I should have done this 10, 20, 30 years ago, that will drive you nutty. And you can't accomplish anything that way, right? So you have to address it and move forward. All right. All right. So rules for trading psychology and discipline. This is something that everyone should be implementing. It's something that I absolutely implement a lot. Okay. Never let a bad day cost you more than you make on an average win day. All right. I never have to worry about taking losses. Why don't I have to worry about taking losses? Because my average win day I make on an average day, it should be N, not average, or not A. Sorry about that. But never let a bad day cost you more than you make on an average win day, period. If you have an account and you lost more than you make on an average win day yesterday, you have a problem. Your problem needs to be addressed. Okay. And then now that we know that we have a problem, we can work on that problem. It's that simple. Okay. Never let a bad day cost you more than you make on an average win day. If you don't know what your average win day is in general, if you don't know what that is, or if you don't know what if you're a long-term position builder and you don't know what your average win is, or you're a swing trader and you don't know what your average win is, that's going to be a heck of a problem for you. Because if you don't know how much you're making, you don't know how much you can lose. Now, there are other guidelines to that we're going to go over, but that needs to be embedded in your head, okay? If you make $1,000 in an average day, that's your max loss. Meaning if you take that on a day, you're done trading for the day. You're done. Doesn't matter if something comes out and something's going to be bought for cash and you know it's going to be bought for cash. You're done trading. It's over, okay? It's that psychology and discipline that will keep you there. Because let's say that you only can lose $1,000 in a day and you're down 500 on the day. Well, you know that, and you're going to lose a max 500 on the next trade. You know darn well that next trade better work or you're done for the day. And you don't want to be done for the day because you want to win. So you're going to make sure that that next trade you do is mapped out perfectly. Why? Because you're putting a discipline around it. You're not going to say, I'm just going to keep firing. this is how much I can lose today. That's it. And then go from there. Now, there are only 4 outcomes per trade. Every 4 outcomes per trade. If you can get rid of one of those, you will be successful. And we're going to talk more about this, but keep the math very simple, okay? I don't care if people are telling you they're doing 70, 80% win rate. It's silly, okay? The best people in the world, Simmons, Paul Tudor Jones, those kinds of guys, all right, they're hitting 50, 51%, 52% maybe. Do they go on runs where things work for them? Absolutely. Absolutely they do. But the one thing that all those people I just mentioned don't do is take big losses. They cut their losses fast, okay? Get rid of your big losses. If you get rid of your big losses, your problems are over, because if you get rid of your big losses, now all you have to deal with is a big win, a small win, or a small loss. Life gets a lot easier, okay? So eradicate those as much as you can. Now, you're going to have gap risk. That's going to happen. You're going to take a big loss still, but you need to focus to make sure that when you can control it, it does not happen. All right. You're going to focus on your stop levels before you ever get into a trade. You're going to see a theme here about control and responsibility. Very simply, okay, people don't use this. And a lot of people like myself, very rarely do I have all my stops in my system, because if someone sees my order size, they might tick it down to come and get me. So I don't want that to happen, but I know where my stops are at all times, and I execute all my stops at all times, okay, no matter what. So if you use that, you've already quantified your risk for the day. There's no surprise. You know where you're at. You know what you're going to lose. Think of it as an insurance policy. Always use a stop loss. Really important part here, because I know people did it yesterday. Never widen the stop loss to give it more room to work. The trade didn't work, okay? Never widen the stop loss to give it more room to work. What would that do? That would take a small loss to a big loss. We don't want that. We want small loss. Your trade's not working? Do the opposite. Tighten your stop. Okay? See what happens if you tightened your stop, and then see what would happen to that trade later in the day, if that was the right thing to do or the wrong thing to do. We're going to get into this exercise at the end of the day, at the end of this, and how you can do that. Okay? But raise the stop if it's not working. Don't widen it. Go the exact opposite way for it. Protect your capital. You can always buy it back. You can always sell it, right? But you can always buy it back at any price. Someone had a great comment in the room today, and they're dead on. Okay. PayPal. I buy it at 92. It goes to 90. I sell it. It goes to 93, and it's going to go up. If I think PayPal's going to 300, do you really care if you own it at 92 or $93? I mean, do you really care? No. But if you're trying to trade it for $2 and it goes down $4, well, now you have a problem. Okay. So you need to understand where you are. You also need to understand with your stop loss levels, what kind of trader you're trying to be. And I'm going to walk through some of that today. We'll do it in greater detail, but we're going to walk through some of that today. But you need to understand that. Just get out of the way. And I know this is easier said than done, but most of the time you'll see a trade clearer when you're out. So when I say you can always buy it back, what will happen is you'll step out of that trade, and then you'll realize, I don't want to be in that. That looks god awful. Okay. And I'll walk through, time permitting, trades later today that were done yesterday and how that saved me money. Any process, okay, develop a process that works for you. Any process that is not the accumulation of many, and please remember this, that is not the accumulation of many successful trades over time, will always perform better than a trading strategy of a single home run trade. This is a really bad idea. And I see this after days like yesterday, where all of a sudden people will not think about managing winning and losing trades. They will not think about how they're going to manage their winning trades, how they're going to manage their losing trades. They're just going to go on the assumption that it's their, quote, system is broken and that they need a new system, okay? Yesterday, you had a second standard deviation move on the SPY. Would it have been great to be short? Yeah, it would have been awesome. But let me tell you something. You try to build a system around something that happened on a second standard deviation move, or something that happens, didn't happen since April, you're going to have a really bad day. Okay. It doesn't work that way. All right. So I'm not saying to not develop your strategy. I'm not saying that there aren't tools that you can use to keep you out of harm's way. We're going to go over one at the end of this, especially for newer traders. I would use this, what we're about to address. But that said, you have to understand, if you want to be successful at trading, it's about a process. Okay. It's not just about an idea. It's why I always pitch education, discussion. It's why we're in the room talking. Okay. It's not the idea. It's the thought process that you have to come with. You need to be able to manage your winning trades. You need to be able to manage your losing trades. If you asked top traders, and I do think like Minervini's a top trader. Okay. You ask him what his losing percentages on his trades, he'll rattle it off. If you ask Paul Tudor Jones, he'll rattle it off. Okay. They know them cold, right? And these are guys that have been around a very long time trading. And that's who you should be listening to. People that have been around a very long time, right? Listening, finding out what they're doing. We're going to address that at the end as well. So you have to manage both sides. Okay? Never revenge trade, right? Never revenge trade. Don't trade angry, right? Think of that groundhog on Groundhog Day. Don't drive angry. Don't revenge trade. Don't do it. So I probably do have a typo you have a typo on this slide. We'll get rid of that not in the first sentence. I'll take a look at it. Thank you, Storm. It's very possible I do. I redid this whole class this morning and did the other class this morning too that we're about to go over. But thank you. I'll double check that. When you have a big loss, you are dealing with revenge, self-hate, market hate, jealousy, envy, fear, anger. Okay. This is what happens when you have a big loss. If you had a big loss yesterday, that's exactly what you're dealing with, right? And you don't want to deal with any of those, okay? And again, I told you this is going to be, I'll try not to get too like earthy on you and go from there. Hold on one second. That is the accumulation. Yeah, I see it, Storm. I see it right now. Thank you. And I just fixed it. So thank you. When you have a big loss, you're dealing with revenge, self-hate, market hate, jealousy, envy. You're looking at people's, oh, this guy had this alert yesterday that was he told us that this was going to happen. All right, so now you're jealous that you didn't get that alert. Now you're envious that you weren't short. You're angry that you missed the opportunity to make money. Now you got to go and go, what, the self-talk starts. All the crap we say to ourselves, it all starts. Why can't I figure this out? Why? Then you're going to try and trade in that? Good luck, right? You're in your own head. Like, good luck. You're going to have a bad day. It's going to get worse. When you put principles around it, it doesn't happen. It just doesn't happen anymore, right? And that changes everything. We all have gone through these periods where we're digging out of a hole. Has anyone thought if the hole never existed that you wouldn't have to deal with the hole? It's very hard to focus on newer traders after a big loss, right? The majority of time they get in their own way. I can't stress it enough. I see it all the time. Okay. Shift your focus on emotions. Okay. So in other words, shift your focus on emotions. So let me just change that. Shifts your focus to emotions. So you're shifting your focus to emotions. Okay. And what you're doing is your focus should be on trading. Your focus should not be on your emotions. Okay. You shouldn't be thinking this or that. It should be on trading. Where am I? Do I still have room on my stop losses for the day? Do I not have room on my stop losses for the day? Okay. Am I done trading for the day? Will I still have room if there's something out there? Okay. The doing a trade right after to revenge trade is a lose-lose. And I'll explain why it's a lose-lose. Number one, if the trade loses, you lose more money. Number two, if the trade wins, you convince yourself that that's what you're supposed to do and you're supposed to revenge trade. And we all know how that's going to work out next time. It's not going to work out too well. Okay. And then you're going to revenge trade that revenge trade. Okay. Don't develop bad habits. That's a bad habit. Don't revenge trade. I can't stress it enough. Okay. This is the hardest one for us to do. And it's the most important. Okay. If you took a large loss, own it. I've taken significantly large losses in my time. I will tell you right now, if I had owned them sooner, I'd be much further ahead than I am. Okay. The sooner you own it, That's it. And why is that so important? Because once you own it, you can fix it. Okay. Do not blame other trading participants. The blame of a large loss rests with each individual, and that's a good thing. Once you accept that you're responsible for those losses, you're in control, not somebody else, right? If you're in control, you can fix the issue, right? And just get that. That's very powerful. If you're in control, you can fix the issue. You don't need someone else to fix the issue. You can fix it. Now, you might want mentors, read books, implementing different strategies, mental aspects of the game, right? Understanding, information, education, but you're in control of how much of that you take in. You're in control of who you take that information in from. Okay. That's huge. Okay. It's extremely powerful to take responsibility. If you do not accept responsibility, the same thing will happen again. Okay. It will happen again. And what you'll do is you'll blame somebody else, and then you'll go look for the new thing. You can't do that if you want to be successful. It's all on you. I post ideas. Those ideas are either going to do good or not good. If all my ideas were 100% bad, you should still be able to make money off me and just fade everything that I do. Okay? So it's all what you do with the information. It's that simple. Accept it, figure out why it happened, make sure it never happens again, and this will greatly reduce your risk. It doesn't mean you're not going to take risk. It doesn't mean that you're not going to come in and get gapped down on. You can read stories about guys that were, Zanger has a great story where he was, had an account one day, he came in, it was 20 million. The next day it was 7. Okay. Lost 60% of his account overnight. So it happens. Okay. And some risk you can't do anything about. So blaming others, this is not accepting responsibility. This is admitting you are not in control of your own trading. You should not be trading like this at all. You cannot blame other people. You are in control and you can fix it. Okay. Analyze your big losses. By analyzing your big losses, you can find your biggest winners. You can find your best performing timeframes and sectors and trading vehicles. All right. So when you analyze your losses, you can go through them and say, you know what? All my losses come from day trading. I have to make a decision there. I either need to stop day trading or get better at it. But all my losses are coming off 1-minute chart entries. You know what? All my really good trades are 15-minute or hourlies. I'm going to just trade those. Okay. Hey, you know what? Whenever I trade gold or silver, I don't do well. Like that, just to be clear, I don't trade gold and silver well. You'll never see me, very rarely are you going to see me in those trades. I just don't do well with them. So I don't do them. Same thing with airlines or cruise lines. If they're not in massive uptrends and up cycles, I don't want to trade them. Okay. Trading vehicles. Are you making more money in options? Are you making more money in stocks? Are you making more money in futures? Focus on the ones that are your biggest losses and stop doing those, or figure out a system to get better at those. But by analyzing it, you can get a lot better. Okay. These are some steps that you can take to analyze a big loss. Was there too much risk? Was the trade well planned? Did you widen the stop? Did I hold a losing trade too long to avoid a loss? Okay. And it happens to all of us, right? So what I want to do now is go through some practices. This went about 5 minutes, a little longer than I thought, but I wanted to go through some real practices here. So mental daily trading practices. These are things that you can do every day to help the mental aspect of the game. And I just want to touch base on this, okay? This is really important stuff because this compounds upon itself. So it's not what you do one day, it's what you do day one, okay? So a mentor of mine told me that, and he's 100% right. So, and what do I mean by that? Okay, it's not what you do one day, it's what you do day one. So tomorrow, if you went in and said, every day I'm going to read for 10 minutes about the most successful traders in the world, okay, not I'm going to read an hour a day because you're just starting to build a habit, so you want to start slower. Whenever you're building a new habit, start that habit very small and then build on it once that habit's in, okay? James Clear has a great book called Atomic Habits. I'm a huge believer in his work. If you're into that kind of stuff, you want to read that book. It's excellent, okay? And it talks about go to the gym for 5 minutes, You don't have to go to the gym for an hour a day. Go to the gym for 5 minutes. Go in there, ride the treadmill for 5 minutes, get used to it. Okay. So all these are things that you can just begin to do. So read books by exceptional traders. Now, an exceptional trader in my mind is someone that's been around for decades, not somebody that won some contest 1 year in a really good year or 1 year and got lucky. Somebody that has done it repeatedly over and over and over again and has been studied and analyzed. Someone like that, it's really very important to get a hold of them and understand where they're coming from. Now, how do you do that? I would start with the original Stock Market Wizards. Jack Schwager's original book, they are the most vetted people, and they're just beasts, all of them, absolutely all of them. And you'll understand how these people think and how they view the stock market, and it will affect how you trade. Okay. So that's the one thing paramount that I would do. To this day, I've been trading over 20 years. To this day, I will still throw on Audible and listen to that book. So exercises such as a quick 2 to 5 minute meditation to clear your mind. I said we were going to get a little earthy. So exercises, quick 2 to 5 minutes, just clear your mind. Okay. Trading Composure on YouTube has a great channel for this. Okay. I've talked to him a couple times, not as a patient, but like I've reached out to him because I really like his work. He is on Twitter. All he focuses on is psychology. All his material is psychology. He has a newsletter you can get as well. But I'm giving you actionable ideas. I'm not telling you to sign up for any of his programs or anything. You go to YouTube, and right there are 5-minute videos, okay, on how to meditate for trading and clear your head. And if you need guidance on meditation, which I certainly needed, and I'll tell you right now, I meditate. I definitely think it's extremely beneficial and grounding. So, I picked up, and this goes back to reading books. I picked up meditation from Ray Dalio. So if you don't know who that is, read The Principles. So he's one of the most successful hedge fund traders of all time. And he swears by meditation. And I agree with him. I mean, it helps. It helps ground you. I did say we were going to get earthy. Focus on your trading day at the beginning of the day and focus how you want it to go. Focus in your head on how you're going to act when certain spots and certain things happen. Okay? Make it easier when it happens. Visualize your trading day at the end of the day on how you wanted it to go. So at the end of the day, you take a step back and you look and go, okay, how did this day go? This didn't go the way that I really wanted it to go. And why is that? Okay. And then what would have been a perfect day? Well, if I sold that stop right here, if I sold and executed my plan, I would have saved $400 or $40,000. If I bought that one stock that I didn't buy, that was the perfect setup, I would have made that $1,000. Why didn't I buy that one? Well, I didn't buy that one because of this one. So how would the day have looked had you done what you were supposed to do? Right? That is extremely helpful. Okay. So, and in regards to this, journal. Like I'm not talking about, and again, I said we're going to be earthy. I'm not talking about Dear Diary, today was a bad day, right? I have these feelings. I'm talking about this is what I did today trading. This is what happened. This is why I did it. These were the feelings I had, why I was doing it. I apparently I was doing that. When you write it all out on the day and you look at it, these were the trades I made. These are the times I made those trades. This is why I made those trades. Okay. When you start journaling it all out, it becomes very simple. Right. And you start looking at it over like a week. You don't have to do it forever. You do it for 30 days and you'll be like, oh my God. And some things will become so glaring. So, okay. So, Joey, I see a question. I'll answer it in 1 second. We're rapid. I'm coming home with this. If stressed, decompress. You're completely stressed out. You're staring at the screen. Go stare outside. So where I am, if I get stressed out, there's a body of water. I go look at it. Come back 2 minutes later. clear your head. Okay. These things help. So that should pretty much wrap up this. I have much more mental trading and daily trading that we're going to do. I want to go over a indicator that I want, especially newer traders, to pay attention to. I think it'll save them a lot of money and a lot of headaches. It's not something that I use all the time because I trade a little differently, but it's definitely something that people can use and make money from. Especially if you want to, if you don't know if you should be a day trader or a swing trader, I think it will help. Let's get to anything here. Storm, I did correct that. Thank you. And if you see more mistakes, please tell me again. I read somewhere that do you have a similar thesis? Never lose more percentage of your in any one trade. You should never lose more than 1% of your total trading capital in one trade ever, period. Okay. Second, never lose more than 3% of your total trading capital on your worst day. I don't know about that one because I don't know what your best day is. So if your best day is, let's say your best day is 10%, right? Well, I don't care if you lose 3% of your total trading capital in one day, right? Because the next day you're going to make that. So, right? So who cares if I lost 3% of my total trading capital in one day? What if your average gain, on an average day is 10%? Like, I don't know what you're making that would be your loss. So I would say, I would equate it like this. Never lose more than 1 times your average gain over 30 days. That's how I would phrase it. I wouldn't say that. Like if I had $1 million, account or a huge account, 10 million, whatever, right? Whatever you guys think is a big number. And, let's say you're batting around $1 million, right? And you lose 30 grand. Do you really care if like the next day you make on your average day, you're making 100, right? You really don't care, right? So, I mean, I don't, why would I, it's as long as the numbers work and the risk versus reward works. And we did risk versus reward before, and again, you can equate it with any size number. You can say, if you think $10,000 is a lot of money, right? If you lost $300, do you really care if your best day is 1,000? You really don't care. Well, you might care. I'm just saying that I would not care. So I hope that's helpful. Any other questions you want to deal with on the mental side of this before we continue? And I know I'm packing a lot in here, and I plan on doing a lot of questions, and I'm packing a lot in here. I plan on doing another mental daily trading practice, but I thought it was important to shift this, and that's why I did. For what happens. So if I have more questions about that, I'll answer before I proceed to the next topic. Now, again, while I'm waiting to see if there's questions, because I know there's a delay in here, I think it's really important to, if you can, turn into tomorrow night's call at 6:30. Okay, so we're going to map out ideas ahead of time so that you have exact game plans on what you should be dealing with tomorrow, okay, or Monday rather, when we open. So there's no question about where my head is or what I'm thinking of doing. And then what we're going to do from there, okay, is we're going to stay on the calls now for over an hour. I'll stay on the call for an hour. It looks like Emily can work with us, so that's really good. Me pointing out key levels yesterday for the first hour. A lot of people DM'd me and said that was their best hour of trading of the day. So, there's things like that. Okay. But I said we're going to continue to do that. I think that'll be helpful. I had so many people reach out to me and say, please do that. Please keep pointing out key levels. So if you have an issue outside of trading, do you take time off? No. Do I? No. Very simply, trading is trading. Okay. So if I make my living trading, right? Yeah, I compartmentalize it. Yes, that's exactly what I do. You're 100%. I compartmentalize it. So I compartmentalize my entire life is compartmentalized. So a lot of people will say to me, how the heck are you on here so much? Or how do you get so much done? I compartmentalize everything. So I get separated from it. Okay. So I get in the zone when I'm on the screens. Here's your tactic. Okay. You have a family issue. Your family issue is not going to get better by you not making money trading. You have a work issue. Your work issue is not going to get better by you not making money trading. You have a personal issue. Girlfriend broke up with you. All right, cool. Thanks, Rob. Appreciate you saying that. So you have a girlfriend issue. You have a wife issue. It's not going to get better by you not making money trading. Okay. So he has a line in there where he talks about it, and he's like, and it's really very accurate. Like, he compartmentalized his life, and it works for me. Like, unless you're in one of these. So yeah, Justin, you're preaching the choir about that one. So I'm not even going to touch that, but very low tolerance. But I think that how you have to look at it is this. Okay. What are your goals? So, like, Warren Buffett has a statement, and it's a great statement. So his pilot said to him, wow, this is great. You bought another new plane. And he's like, I can't wait to fly that one. And Warren Buffett said to him, do you plan on flying for me for the rest of your life? And he said, yes. And he's like, well, he's like, I would have wished you had more aspiration than that. And he asked him to create a list and said, tell me 20 things that you want to do with your life. He said, give me 20 things you want to do with your life. So the pilot goes home, thinks about it, and goes, wow, and writes him all these 20 things down. He goes, okay, now whittle it down to 5. Okay, whittles it down to 5. He goes, okay, throw out the other 15 things and never think about them again. Do these 5 things until they're completed, and then create a new list. And it becomes focus, Justin. It's really that simple. This is your focus. So whatever the issue is, it's a completely separate issue that has nothing to do with trading. If trading's the issue, that's very different, right? But if it's got nothing to do with trading, then it's got nothing to do with trading. It doesn't mean that it doesn't drag you down. It doesn't mean it's not in your head, but it's you need to get your head in the game is the best way that I can explain it.